right in. The first stock that has to top that list of movers and shakers is Coforge. Look at the stock right now. It's down a whole 9%. Not only did the company come out with numbers yesterday, more importantly, it's announced an acquisition. It's acquiring a little over 50% in Cigniti, which is also a listed IT firm. And we also spoke with the management. So, Reema, just take it away. I mean, what has gone so wrong? Why is the street so disturbed about this development?
Well, for one, the company is not given an FY25 revenue guidance. They typically quantify a revenue guidance. This time, they've not. So the street reads it as that perhaps the environment is a little too uncertain for them to give a guidance, a specific quantitative guidance. So that's concern number one. So when we chatted with the management about the why you're not giving a guidance, he just basically said that, you know what, look at the correlation between our 12-month executable order book. So they clearly give you a 12-month executable order book and the revenue growth. So last year, when they started FY24, the executable order book was up 20.7%. The company delivered 13.3%. So he's like, use the same correlation. That will continue. So as they begin FY25, their revenue growth is, the order book is up 17%. So the interpretation is that maybe the organic revenue growth could be about 10 to 11%. In fact, you know, we asked them, is 10 to 11% a comfortable organic growth? Is it a fair assessment given the correlation? He said yes. But that's the first concern, that there was no FY25 guidance. Secondly, Q4 margins were a miss. Here the management said that, well, Q4 margins are a miss, but for FY25, we are talking about a 50 basis points margin expansion. And the third concern is this acquisition will result in dilution, because the company will have to raise money to fund the acquisition. And plus, after that, they're planning to do a share swap with Cigniti Tech. So therefore, that's a further dilution. So the management said that, you know what, this acquisition is going to be a game changer for us. That's the word he used, because it creates 3 new verticals for us straight away: retail, high-tech and healthcare, and they'll be scaled up. So retail will have a revenue size of $100 million, healthcare will be 50, high-tech will be $50 million. So he's like, that's number one. And secondly, it increases their presence in the United States. So US will now start contributing about 55% to their revenues. But the street is concerned that yes, there is going to be a dilution. The company is planning a $250 million QIP, and after that, there will be a share swap. So those are the 3 key concerns that the street has. No FY25 guidance. Q4 margins were a miss, so there is concern about the margin recovery from here on. And 3, the acquisition, though it does add scale, heft, geographical presence, capabilities, it will result in dilution, and maybe the dilution offsets the benefits from this integration.
Of the acquisition itself. I guess that could be some of the key points as Reema is describing them. Let's actually listen up to the